Looks like we're live. All right. Hi, everyone. Welcome to today's live stream with DWF and Falcon Finance. Today is going to be a really fun one. We're talking about something that's been getting a lot of attention lately, the DWF Labs DeFi Fund. Why we launched it, what we're looking for, how founders can actually win in this new environment. And I'm joined by two people who genuinely kind of live this stuff every day. So we have Andre, who's the managing partner at DWF Labs, and we have Artem, the chief RWA officer at Falcon Finance. Thanks for joining, guys.
Thanks for having us.
All right. So let's zoom out for a second. Considering we've been in a little bit of a turbulent market, everyone listening has kind of lived through different cycles, 2017, 2021, and whatever it is right now. So if you had to describe this market environment, how is it different from those, those earlier cycles, if we can call them? And what are the specific data points that you watch to understand if the market's actually healthy heading towards 2026? Maybe Andre, we can start with you.
Yeah, look, first of all, right, each previous cycle was kind of similar to another ones. What I mean, when Bitcoin went up, altcoins and blue chips and even whatever tokens went up, right? When Bitcoin went down, everything went down, right? But now it's completely different, right? Bitcoin is going up, but altcoins are not going up, right? Most of blue chips, if you take a look, they never reached their all-time high since 2021. But Bitcoin made 2x from 2021, right? And this is a very big differentiator from the previous markets, right? Because now we cannot say that, okay, BTC is going to 200K and we are expecting to have an alt season. I don't think so, because, yeah, Bitcoin will go to 200K. It's a point of time, but regarding alt season, I'm not sure. Of course, tokens will go up, but comparing to BTC, it won't be similar growth. And investing in crypto became much more complex comparing to that years. I mean, if you consider crypto in general, including altcoins, if you consider crypto as Bitcoin, it's much more easier, right? You know that everything is bullish, regulatory frameworks are in place, governments deploy money into BTC, institutions deploy money in BTC, pension funds deploy money in BTC. You also can deploy money in BTC and wait when it grows up.
Yeah, I think that's interesting. You also mentioned in a recent conversation of yours that we need more money in the market, which basically means that we need to build for use cases that will actually bring a lot of liquidity, and that will eventually attract a lot of users. And that's the only way actually that we can come out of this difficult cyclic environment. At some point forget that everything runs around the price of Bitcoin, right? It doesn't work like that. We have to make real infrastructure projects, get real users, get real money flowing in the market, and only then it'll look better. If I can call that. All right, Artem, do you wanna add in what do you feel about the market, maybe from an infrastructure perspective?
Yeah, I think Andre pointed out a very interesting angle, but I will try to cover a bit different part. So I've been in the market for quite a while, and yeah, I think in my point of view, all these three cycles are a bit different, because 2017 was a ICO era, so basically speculations with no real infrastructure, and there were a lot of talks like crypto is bad and the blockchain is good by regulators and institutional players. Probably you remember that everybody was trying to implement blockchain and not to deal with cryptocurrencies. So 2021 was DeFi summer. So a whole new set of DeFi tools appeared, like AMMs, lending platforms, and some synthetic assets. And a lot of liquidity came to the market. So probably you remember that Uniswap, which was there for 3 years and were like half dead, half alive, became sort of the core market venue at this DeFi summer period. But most of that activity was driven by incentives. People didn't really understand where those yields were coming from, and later we saw how these risks eventually exploded, like CeFi blowups, algorithmic stablecoins going to zero, and even some exchanges, probably you remember, some bankruptcies and so on. So I think 2025 is completely different. We have institutional demand. We have proper inflows from like traditional market. We have a lot of regulation in place in various jurisdictions like MiCA in EU. We have Genius and maybe Clarity in the next couple of months in US. We have a lot of different other regulations in place. So a lot of infrastructure was built. And real world assets actually operating on chain. So yeah, I think together with this, we have still meme coins and retail speculations. I think they're louder than ever. So market is more mature structurally, but sometimes a bit chaotic as well. But I think it's going to be fair to say that it's the first cycle where real capital, real products, and real infrastructure finally meet. So I think it's a great time and great time to be in the market.
Yeah, that's right. I mean, anything that's just driven via incentives is obviously not working, and we've seen that time and again in 2025. And I think it's great for the industry overall that we, like I said, we build for real use cases. All right. So coming back to the DeFi fund that DWF Labs kind of put out a few weeks back, what gaps did you see in DeFi that kind of convinced you that this industry needed a dedicated fund for DeFi? And is there like a specific adoption curve that you're looking at to attract some builders? Or how are you seeing leveraging this fund to get the best builders here in DeFi?
Yeah. Look, first of all, right, there are not many directions of the market that are permanent, right? It is trading, it's investment, it's payments, it's yields and money markets, right? The rest can appear, can disappear, but everything is around this, right? It can be memes, it can be AI, whatever, but anyway, they solve these problems, right? And that's areas they are most profitable in the space because everyone needs to do payments, everyone needs to trade, and everyone needs to invest, right? And we believe that DeFi markets will grow, right? And as Artem said, real capital is coming, RWA is coming, right? Also, market is more mature, right? Which means that there are not that many new players, but that players that are still in the market, they are much more stronger, much more experienced, and they need much more advanced solutions. And they are much more selective than 5 years ago during DeFi summer, right? And at the same time, you could see that the market is at not the best conditions in terms of liquidity, kind of financing, and venture capital. Because when prices is going down, also end of the year, right, it's quite hard to get financing for the companies. Of course, there is some VC playbook happens, but we believe that we have expertise in trading, in investments, in DeFi, in the market itself, right? We have funds available to deploy, and we think that it's a very, very good time when some recent narratives kind of showed that they're risky and there are rooms for improvements, right? And we believe that this is a time for innovation and inventions, that we would like to support these innovators and inventors to appear on the market at very hard times, to build during very hard times, and when liquidity is coming in, capture this liquidity and grow faster than others. This is the goal. This is the rationale.
Yeah, it's very interesting that you mentioned that because, when I see a lot of people indicating that there is like a TradFi and DeFi crossover happening, at the same time, the projects that you just pointed out have failed recently, right? So this crossover to kind of advance that, and when actually institutions will need real advanced infrastructure to kind of plug into. So I think this is a very strategic time where we need more builders to be enthusiastic about building in DeFi, and not getting scared because of what happened. So I feel strategically this it places this fund in a very interesting time, and it's going to really advance the institutional adoption that we always talk about, which Artem mentioned. So yeah, really really excited for that. Also, Artem, if I were to pick your brains on, you've been with Falcon from day zero, day one, right? Like expanding the RWA infrastructure. How do you think a fund of this kind can really help build the right designs, the right systems in a project like Falcon Finance? Because we really want to repeat these case studies at DWF, right? And get more successes in our fund.
Yeah, that's a great question. So I think I have some personal experience. I've been building in tokenization since 2018. So when the infrastructure simply didn't exist. And I know firsthand that technology is not the hardest part. I think the hardest part is right timing, liquidity, and distribution. So, and I think these are the major areas where DWF makes a real difference. So I think the most valuable thing is their sort of market intuition, a sense of what models market is actually ready to adopt. So yeah, they're helping a lot. And I think the second big thing is, of course, liquidity and users. Because when you launch a new collateral engine, like in Falcon's case, or stablecoin, having some traction changes everything, because liquidity builds sort of trust. And I think the third major thing is timing. So when I was building in 2018, the platform for issuance of security tokens, it was way too early. And I think one of the good things DWF can do is to help founders understand whether their idea fits the current cycle or needs some adjustment. So I think for early teams, this guidance is often more valuable and important than just money. So yeah, cheers to DWF.
Yeah, we hope we see a lot of great founders, and in this cohort, or the angle that we launch. Also, we're seeing a lot of expansion of Falcon Finance towards RWAs and other assets beyond crypto. So how did this really come about, and how do you think this how's the vision of Falcon Finance now after we've done so much expansion around RWAs and a lot of other institutional integrations recently in the last quarter, I guess? How do you see this expanding? Where is it going in 2026, Artem?
So I think the major idea is to accept as much good quality collateral as we can, and to build the engine that allows any type of collateral, either crypto or real world assets, to be plugged in and to receive liquidity and yield. So I think this is a major idea, and we are evaluating a lot of options in various spheres. So we started from the sort of most easy one, the tokenized treasuries, but we're constantly adding new and new types of collateral, stocks, tokenized gold, sovereign debt by non-US issuer, yeah, Mexican bonds. So yeah, the major idea is to expand this even further, not to focus only on the assets that already been tokenized, but to work with projects and counterparties that have a good quality assets. They may be not tokenized, but they need liquidity. They need maybe some gateway to crypto world, or they don't need even to touch the crypto. Some of them just don't want to use a tokenized asset or to use like stable coins at all. They just need funding. And I believe this convergence between TradeFi and DeFi will be the major case for us. So yeah, we'll continue to work in this direction.
Yeah, I think it's a massive pull for TradFi and users who are not plugged into crypto, your degen style users, because we're currently kind of like overpowered by those users, which is why some of the expansion or adoption in crypto kind of I wouldn't say pause, but slowed down. And I think what we're doing at Falcon is giving a chance to a lot of these, like I said, TradFi users, non-crypto users to kind of come in and explore these use cases without even getting really confused by the technology, and just like enjoying the benefits. So I feel like that's really amazing. Um, all right. I do want to touch upon the incubation efforts that we're expanding, because a lot of builders have asked me about this, and I'm sure a lot of our listeners are excited to hear about this as well. So DWF Labs has obviously incubated a couple of projects. Obviously, Falcon has been a huge success. So what is the playbook for founders who are trying to succeed in these market conditions, right? This is also a tee up into into the expansion efforts, and how do you see really building this incubator from here on? And does that mean that the modern incubators will look different from what we had earlier, which was a more pivot based on the Twitter narrative style advice to projects? What do you think, Andre?
Yeah, I think, look, there are a few types of incubators on the market, right? The first one is kind of meme coin and some small cap coins farms, right? That they kind of launch something like constantly. It is like very low margin, and it's not really incubator from my point of view. It's something like the factory, right? Then second one, it is a kind of financial players, right? When we name ourselves incubator, we advise you with the token economy, give you some cash, and then charge some incubation fees, right? And third part is some more comprehensive work and comprehensive approach, which covers not only cash and some advisory, right, but which means a proper partnership. When I say proper partnership, it's not like partners that, company A, company B, but like partnerships in terms of founding team. When both counterparties, they agree that this startup should develop this direction, right? And this business area and achieve these goals, right? And together they are thinking how to utilize their resources, efforts, funding, and whatever to reach these objectives and to have success. And it sounds like very kind of simple, right? But it covers many things, right? Because money is the most easier thing. But the most complex thing is how to get users, how to get builders if you build something, right? How to get like long-term clients, how to get market attention, how to market and promote your protocol, right? How to launch tokens, how to finance, how to attract investors, right? And what to do after TG, right? Because if you take a look at most of the tokens, right, before TG, it's huge activity, it's huge TVL. After TG, it collapses, right? And when we incubated Falcon, we wanted to build a case study completely based on our knowledge and our funding, right? To be able to show that it can work like this, that you can make money from the business, you can build a great product that even grow after TG, and you can have a partner who kind of battle tested, That's our vision, yeah. And frankly, that's not many companies are doing this in the crypto space. Maybe like 2 or 3 groups of people, and that's it. And we believe that this is a kind of blue ocean for now.
Yeah, it's a nice segue to actually something that also people want to understand. I mean, lately we've been talking to a lot of reporters, for example, about how we've been so resilient in the last few months. despite the market being quite choppy. So I think it's a great platform to understand, Artem, what are the kind of design decisions, system decisions helped Falcon Finance stay so strong and not get affected. Were there any operational habits or design decisions, like I said, that helped you stay stable when the market wasn't? Because I feel the resilience comes from founders, where from founders or founding team, where they make these decisions way before the market tests them. It's never like on the spot that, okay, today let's just pivot. So can you do you want to talk about like how this entire journey began? What were some of the important decisions that you took back then?
Yeah, I think Falcon is resilient for a very boring reason. So we are paranoid about risk. So we have different layers of risk modeling and structuring the risk. So we're applying from the day one. So on the collateral side, we only accept assets with real liquidity and price discovery. So if there is not enough depth on major venues and derivatives around it, it's either gets a very conservative haircut or it doesn't get in like at all. The same approach applies both to crypto and real world asset. It doesn't matter. So on strategy side, everything is delta neutral. We don't take directional bets, and we diversify across various market neutral strategies. And threat exposure is something to eliminate, not to justify. And finally, the real world asset part, I think it adds stability because high quality assets like treasuries or corporate debt or equities provide a sort of buffer when crypto is volatile. So as I mentioned at the very beginning, it's quite boring. So as every risk model, it's just you need to have the rules and you need to follow those rules, despite any options that you may see feasible at the particular moment. So strict collateral rules, neutral strategies, and top tier real world asset backbone. That's basically why Falcon stays stable. Yeah.
That's great foundational thinking, I guess. It's interesting to kind of share here where we have some of these builders listening. I think what I wanted to cover now is that a lot of the builders come and ask us, can we just like apply in the fund if we don't have a working product, or if we don't have like the tokenomics ready and stuff like that? So how do you see when a builder kind of comes to you or applies or whatever, how do you see its funding ready? Is the MVPs the criteria for you, or is it more like foundational thinking or the design of the project that something like a Falcon that really attracts you? Andre?
I think, look, from my point of view, every stage is funding ready, right? The question is how much funding and what valuation, right? Then every stage is funding ready, right? But from my point of view, it's very important that the team that comes to us, right, should be able to build MVP by the team resources, right? Because it doesn't require a lot of investments in Sensor, right? But if you have, I don't know, if for example, if I had an idea to build my own Starlink, right, and try to fundraise for this, right, I'm far away from building a Starlink, right? Maybe I have a wish or have a dream, but I have no resources, no experience, no team, like nothing to do this, right? And this is a little bit unrealistic, right? And this is not exactly what we are looking for, right? But for example, if Artem comes to us and says that he wants to build some framework for RWA, right? And he has legal experience, he has, I know, group of people that can help him to build a smart contract, right? It makes sense, right? Because then you know that, okay, I have we have a team that can deliver something and we can help to make it bigger. Kind of show it. And of course, then has capacity to build, ability to build, then more not really that more. It's right. I think that sometimes it's better to kind of have just MVP and
Yeah, so the team skill set match and the idea itself has to be, has to kind of match the market and has to be innovative, like you said. It shouldn't be just like repeating earlier. Just because something was successful 4 years back doesn't mean that you can achieve that success. If you're trying to create something similar, so it has to be innovative. Also, what do you think about these off-the-roof valuations that projects sometimes ask for?
Look, regarding the last question, right? I do believe that the must-have is owner or CTO. If everything is outsourced, it's kind of super weak point. It cannot work. It cannot be scaled. So you rely on some third-party software. It doesn't work. But answering this question, is still kind of priced much higher. I mean, in terms of startups, much higher, right? And we just kind of keep it talking. Honest and bold. And of course, we expect the market. Yeah, and I think if that is no venture market, it will be priced, I don't know, 10, 20, 50 times more on the.
Yeah, and a very interesting point that you mentioned, having your own tech team and primarily the CTO is super important as a co-founder, because this is like very it is traditionally being tested even in the Web2 space, that founders who have their CTO, especially if their product is tech, which everything pretty much is, right? Then they have like very less chances to kind of succeed, because these dev shops that they hire, they don't have skin in the game, right? They're not like working towards the same mission in the way a CTO can, or a co-founder / CTO can. So it's a really good point. Very sounds very simple, but super interesting when you like actually see some of the projects why they failed. Yeah. All right. And then I think you touched upon this already. You mentioned like pubs and liquidity infra matter a lot, and we've also mentioned in our announcements that we're specifically looking for pub dexes, money markets, yield protocols, and high priority systems that can actually bring in a lot of users and also bridge this gap with TradFi. Do you think that these are the categories that are quietly anchoring everything in the ecosystem right now?
I think yes. I think this is the most promising niches that, because they are crypto native. It's like, right, because it's which always priced much higher than central options, right? On the other hand, see, like as shared, right, from cycle to cycle, more and more advanced, decentralized. And if this trend, we will have more decentralized finance liquidity next cycle. Frankly, if you take a look at overall TVL locked, it's much more liquidity than it was. It's liquidity, most of people want this liquidity to play, but there are much.
Yeah. Interesting. Also, RWA is definitely a huge narrative, and a lot of like builders are interested because, again, I mean we've spoken about it. It allows you to access non-crypto assets. That is one. But also there are a lot of like reports that suggest that there are estimates that's going to touch trillions by 2030. So Artem, we'd love to hear from you. From where you sit today, what's actually real today? What pieces of the stacks you think still need to be built before that trillions, by 2030 is possible in terms of like the infrastructural gaps? Do you think there are gaps and that needs to be addressed? And this could be like an interesting category for the fund to kind of fill in with these builders coming in?
Yeah, I think real world assets have finally moved beyond theory. So honestly, since the very beginning, there were some ideas of tokenization of gold or real estate or some collective wines or cars, some crazy things. Yeah, but now we have billions of tokenized treasuries and funds quite active on chain, so which is real progress. Comparing these billions with global financial markets, which measured in hundreds of trillions, we're still at the less than 1% of the whole opportunity, I believe. So I think technologically the industry is ready. What's missing is sort of regulatory architecture, maybe some standardized custody and transfer agent functions, and wide distribution. So assets which was tokenized don't live isolated. I think it's the biggest problem at the moment. I see like sort of three major angles or areas in whole this real world asset part. Number one is DeFi. Number two is stablecoins, and number three is real world assets. So real world assets provide quality collateral and yield. Stablecoins provide settlement, and DeFi provides strategies and composability. If one piece is missing, the whole concept sort of doesn't work properly. So can real world assets hit trillions by 2030? Yeah, I believe so. Bitcoin to 1 million, real world assets to trillions. It's going to be a good year to live. But I think it's only happens if institutional capital settlements, liquidity actually migrate onto crypto rails. So tokenization itself, just simply tokenizing some asset, is not enough.
Awesome. Yeah, and I think there are some regulatory steps being taken overall in the crypto space, obviously in the US, and I think that's going to set the ground for this expansion. And hopefully we kind of see interesting times, actually trillions. All right. So this was a great conversation. I think we got a lot of information on what builders kind of need, and also a great case study, from Falcon in terms of like what success looks like. So yeah, I really want to thank you both for joining us today, and we'd probably catch up soon in another live in the coming weeks. Thank you.
Thanks so much.
Thank you.
Thanks everyone for tuning in. Bye-bye.
Bye-bye.